This is Market Week Live, August 23rd, 2024. Information and support for traders and investors. Welcome everybody who are our members and are now watching this on our link that got sent to them. And welcome to everybody that's out there on YouTube right now watching us. This is the legal. It just says that everything we bring you is for entertainment and educational purposes only. You should always be discussing this with your investment advisors, and you can refer to our full legal by going to askSlim.com. Your host today, our full amazing analytical team. Me, I've been at this for 50 years. A lot of you have seen our new website that features my 50 years as a trader when I started in the CBOE back in May of 1974. Matt Serpy's been with me a couple of decades. Arvi, close to that. Katie, she seems like she's been here forever also, our expert in options. And you can learn more about us by going to askSlim.com. About askSlim, meet the team, and you can see some interviews that we did that I think you'll find very interesting. If you have information that you need about our website, membership issues, please write to team@askSlim.com. For anything on our content, information on education and analysis that we provide, first-time specials or upgrades for our members, write to Matt@askSlim.com. Coming up in this show, I'm going to bring you my opening comments on the markets. We're going to bring you a trade planning session where all of the hosts goes through step-by-step our analysis on a trade idea, showing you our total approach to trade planning. And I think you're going to find that extremely interesting. Matt is going to review our services, and you're going to see a special that we're bringing for level 4. For those of you that are current members and want to upgrade, this is a great opportunity. For those of you that are brand new, well, once you get a good look and a good feel for the amazing breadth of the work that we bring, I think that you will certainly want to try this. We'll do an express round where we're going to answer your questions, all of us. That's for level 1 to 4 members. So if you're watching it on YouTube, please do take advantage of some of our specials and become a level 1 to 4 member, and you'll be able to be a participant in the Q&A. And you can ask us about our services, trade planning, chart analysis, trading issues, anything that you might have that comes up for you as a trader. We'll do our best that we can to help you with that. And I'm going to bring you my stock market analysis, multiple time frame analysis on the stock index, sharing our proprietary indicators with you. How to watch the show? Well, premium members get a link and they can participate in the Q&A. Free and non-members, well, they watch us on YouTube at askSlim.com. And we encourage you, if you're watching us right now on YouTube, please do like that video and do become a subscriber if you're not. As I said, click that notification bell on YouTube. On X, follow at askSlim. And if you want to get our information free every single day on the stock market, sign up for Snapshot Lite. If you're not a member right now, go to free stuff on the top of our website and click Snapshot Lite. Sign up, no credit card, no nothing. You'll get our analysis on the S&P 500 every single morning. Matt does an incredible job on that. And write to Matt for any questions you might have on what we provide. All right, this is my opening commentary on the market. Well, the stock market vaulted upward the past 2 weeks. And most of us know really performing much better than what my analysis had projected. The panic over the surge in the yen caused an anomalous break in all assets across the board, which had us lowering our resistances and projections. That's a mechanical way that we do our analysis, but the huge rebound quickly showed me my mistake. S&P 500, which had fallen 10% exactly in the time frame that we were looking for, has now gained almost all of that back. Now, that was a deeper decline than I had expected. We're being more positive. It has now rebounded to within 26 points of an all-time high. That's the S&P 500. Though the NASDAQ is weaker, the Russell had been much weaker, but all of a sudden some of that is changing right now. That's certainly about the what I'll share with you about Powell's comments in a moment. Last week, well, strength came early as investors looked towards the FOMC minutes, which showed that most of the Fed heads are ready to cut interest rates in September. Payroll, well, those adjustments were incredible. They reduced the amount of actual payrolls that were created for over the last 12 months by 818,000. But that means that everything that they reported that the markets reacted to over this last 12 months on payrolls were bogus. And that's really a sad thing when you really can't count on information that's coming out of the government. Well, maybe we should know that. Powell, they were also waiting for his speech, which came here on Friday at the Jackson Hole, which is often a market moving event. The market really was strong until Thursday, where it pulled back on some profit taking and kind of ahead of Powell's speech, some investors lightening up on what have been these huge gains over the last couple of weeks, or at least a huge rebound. And then Friday, well, the market strong early and then accelerated to the upside as Powell spoke at Jackson Hole. He said, well, it's time for policy to change. Well, that's not really a surprise to us. We knew that they were leaning that way. He said that he would continue to support a strong labor market, which has been weakening. And those of you that follow the ROM rule, which essentially says if the 3-month moving average of unemployment moves up by 0.5% over a 12-month period, anywhere in that 12-month period, that signals a recession. That's never missed, and we just saw that signal. They have to be looking at that also, besides taking 818,000 jobs off the payrolls. So they are certainly ready. He said that he doesn't see any need for further cooling in the economy. And though that they're ready for rate cuts, they would be data dependent still. My opinion is about that, and I have said from the beginning of the year, if they were going to cut rates, they were going to do it late in the year, and they would do it gradually. Problem is what I call a doom loop, a commodity doom loop, and that is when they cut rates, it's very likely commodities will move up sharply. So we're going to see that probably coming sometime towards the end of the year and into next year as they begin to reduce rates. And certainly if there's a recession, which we're getting a sign of based on a lot of things that are slowing down besides the ROM rule, then we will likely see interest rates moving down more and more sharply, feeding the commodity rally, and then this doom loop bringing interest rates up again, or at least stopping the Fed from cutting anymore. In the meantime, we had, as the market was moving up before this yen break, we saw that there was a rotation going on into small caps and mid caps, and that really looked like it had died. But now that the Fed is coming out and saying, well, they're ready to be easier, the market moved up sharply. You have almost 10-to-1 advances to declines, an amazingly strong breath day today, besides the fact that the market has gotten a little sloppy here at midday. And those rate cuts are good for the small caps because they're the zombie companies that have to borrow money, and they are the ones that all the stocks often benefit. So we see that, and we see that going on right now as the small caps get hot once again. Now, well, the S&P 500 recovered. But many of those old growth leaders, the ones that took the stock market up, they look like broken stocks to me. And that small cap rotation is going to be very important if it is back to be able to help the market move up to new highs. Yes, a good possibility. The thing that we cannot deny, and what I brought up in the past, is that now the markets move back, the market cap is back up near 200% of GDP, historically overvalued, extremely overvalued. And while the stock market has had a great rebound and certainly could go to a new high, there are some reasons to believe that the upside is very limited, and that volatility, like that which we saw when the yen had that surge is likely to come back again. And I think we're going to see maybe a lot of that. Historically, when the stock market has big swings, especially at a place where the market is up near a high, that means the market's not healthy. And I think we're going to see a lot more of those big swings. And I'm going to show you charts in coming weeks when they develop a little bit further that are likely to show you that this kind of action is what happens at major tops in the market. So for now, we have small cap revival, and we have our focus on short-term momentum, which is driving the stock market to the upside. All of that, really, if you're a trader, you have to believe it and believe that the market can achieve a new high, especially the Russell can come to life and drive the market up pretty significantly. But if you're long-term, if you are an investor or a long-term position trader, you really have to look that the risks are high. And this is another opportunity to lighten up. For stocks, well, the S&P 500, NASDAQ, up fractionally percentage, or NASDAQ about 0.5%. The Russell's up 3% on the week, and it's all today. So you really get an idea of the kind of buying that's coming into the stock market. 30s, they're up 1 point on the week for the bond market. 10-year yields down about 9 basis points. It's not a huge move right now on a week when the interest rates are, the commitment to lower interest rates is there. And I really think it's baked in. You may get some continued, mild rally in the bond market, or a little bit further move down in the interest rates, but I think like 3.7% is probably about the lowest we'll see for a while. Gold market unchanged on the week, but really incredibly solid. And the silver market gained 65 cents. And copper and platinum, they all gained, but the industrial metals are still very sloppy here. So it's really gold that's the one that's standing out most in that metals category. The dollar down 1.7%. We had warned that it could come down and approach 100. It has done that. Now, the patterns are suggestive that we're going to get a rally soon in the dollar, at least some kind of a rebound, but I don't think that that's going to last for a long period of time. So we'll look for some kind of a bounce in the dollar. That probably aligning with some kind of a pullback in the metals. But overall, metals rock solid and the dollar very weak. Oil, that loses $1 on the week, and it's been rebounding, but I actually think that it's a short-term sell pretty soon. So that's what's going on in the major markets for this week. We're going to move into our trade planning with the askSlim team session, where we take you from analysis to the trade idea. This is really interesting because we do this live show every couple of weeks. So we do this segment every couple of weeks. And 2 weeks ago, we did this. And interesting, 3 out of 4 were pretty much correct as far as our analysis goes. The one that was not correct was the one who was the most bearish. That was me. I gave up a short analysis for NVIDIA. And NVIDIA just absolutely with the market blew out on the upside, and then that was completely wrong. But we're 3 out of 4. And what else is interesting is that if you remember and you see our trade ideas that I reposts up there all of the time, his directional decisions are about as good as they ever come. 73% correct, which is just mind-boggling, pretty much in line with what our team did 2 weeks ago. So I thought I would report that. And if you remember, go to Trade Ideas and you'll see those numbers up on the top, which are, I think, just phenomenal. Artie's done just hundreds and hundreds of these trades. And of course, Katie does Trade Ideas with options, trade planning with options, and she also has done a great job overall. So we're going to get into this analysis right now. I'm going to show you XRT. Katie will show you Costco, RV Meta, Matt Uber, and interestingly, they're all long side trades. So I'm going to move now into, well, that's the SPX. I didn't want to show you that yet. So let's just go to XRT. So this is the retail category XRT. And of course, we do cycle analysis, which means that we look at the rhythms of the market, money flows, and what's on the bottom are the cycle brackets. That is simply a guide. It's a drawing tool that helps us understand the money flows, the ebb and flow in the markets. And when you look here, you can see this cycle right in here, the clarity on that, the bottoming phase, the rising phase, the peaking phase, the declining phase, all of that pretty well outlined. There's some mid-cycle points right in here that I don't have these the small cycle in there, but I'm just going to duplicate this right in here so that you can see how this cycle bracket works and how the minor cycles line up, and they're not exactly perfect as you see in here. This one was really nice right there, and really what you can see looking at this is that these two cycles right here and right here had declines right into those declining phases, and now they're in a clear uptrend, and you can see that uptrend in here. Now what's important to look at is that this rally right in here is 3 weeks old. Now 3 weeks is really 3 weeks young, and that because this cycle right over here is configured in a positive way, it didn't quite get down to that 78.6, but still the trough here is above where this trough was right over here. That says the probability is high it's going to achieve this level here of the old high or surpass that. So what we're looking at are the fib extensions in here, which are about 80.5 and up over here to 83. That's what we would expect in this first rising minor cycle, get up into this fib extension area, which is that blue area right up over there. So the question is, it's now had this big rally, and now what we have to look at is the shorter term to look for, where do we buy it? Now, well, clearly, because I'm going to go back to the weekly for a second, you can see in here the upward turn in momentum right there, the only 3 weeks of rally so far in the or early in this rising phase. What we want to do is we want to be a buyer. I mean, that's how I see it. You can see that it's been trading in this range from down here about 70 to up here at about 80. And the question is it going to break out of the range? So what we want to do is make sure that we enter in a way that's favorable. So what I do is I put in the support zones and then mark that as a buy zone. It's a buy zone because we have positive momentum. And if you look on the bottom over here, you can see that this is the slim ribbon PO giving you an upside momentum signal today. All of that says that when this minor cycle over here corrects, and you can see where it corrected down over here, that then it is likely to be a buy area and give you the next rally. So the question is, do you chase it on the long side in here? Well, it's not my style. My style is, since I want to buy this and I want to buy it in a favorable entry area. Why? Well, because it gives me less risk in a couple of ways, less monetary risk and less potential risk of my emotional capital. Because if it gets into this zone, the probability is that it will run out of time on the downside, it'll be in support, and then it will move up again. So that's important to me, maintaining my emotional capital, maintaining my monetary capital. So this is the zone I want to buy it. That really comes in about 76.3 down to about 75.25. And that would be where it was, well, just 2 days ago. So based on the timing in here, and I'm just going to mark this off for you to see right here, generally the area that it comes down to is 3 bars or so on either side of the ideal cycle. So I'm going to mark that time zone, and that's what this analysis is. It gives you time and price regarding where particular actions have the highest probability, and that's what we have right over here. Sometime between September 5th and September 16th, at a price somewhere between 76.31 and 75.25. That really is my most favorable entry zone right over there in time and price. So alongside trade that I don't think is quite ready, I'll be waiting for some kind of a pullback, and then it will likely give us the highest probability of another upside move, testing at least the top of that range right up over there, which is in just over 80, or maybe getting further up over here into the 83 area at the top of that fib extension zone. That is my analysis on XRT, and I hope it was informative to you and gives you a good potential entry for that long side trade. I'm going to turn this now over to Katie. She'll bring you Costco.
Okay, let me share my screen. Let me know when you can see Costco.
Gotcha.
Okay, perfect. So this is the weekly chart of Costco, and on the bottom, we have these cycle brackets that are 16 bars in length. And the brackets represent an ideal cycle, so the actual cycles are outlined up above around the candlesticks. These vertical dotted lines show where the actual cycle lows occurred relative to those ideal cycle troughs. Now you'll also notice a series of positively configured cycles here, each one ending higher than where it began. And in each one of these declining phases, there was not an excessively deep retracement. This one to the middle of the support zone, this one was swamped with a barely discernible low on a dip that occurred over only 1 week. This one, the bottom of the support zone, and this most recent one to the middle of the support zone. So, with all of these, the probabilities favored Costco being able to make a higher high in the subsequent cycle. And that is what happened. So, in this current cycle, we are just a couple of weeks off the low. Costco has not made a higher high yet, although it has gotten close. So, our projection is for Costco to be able to do that. And I have put an extension level up here for our initial target, the 61.8% extension at 916.23. And above that, we have a 78.6% extension at about 950. One final thing to note on this chart is the reversal scout. That's our proprietary momentum indicator, this green and purple ribbon. Notice how it turns purple after these cycle peaks here and here and here. And that indicates that momentum has turned negative. Then after each cycle low has formed, it turns green again right here. That one was swamped. It never did turn negative, turns green again here, and in this current cycle right now, the reversal scout has turned green again, indicating a shift back to positive momentum. So switching over to the daily chart, we have our synced intermediate and short-term low right here. We got an improvement in momentum with our reversal scout turning green first, and then the slim ribbon, which colors the candles red, gray, or green, depending on the momentum conditions, that improved from negative to neutral to positive. And we have cycle brackets down here that are 21 bars in length. We have a daily cycle timing window coming up. That's a period of time represented by these vertical blue dashed lines when we expect the current cycle to form its low and then begin to move up into the rising phase of the next cycle. So that period of time starts next Tuesday, August 27th, and runs through Friday, September 6th. So the setup that we're looking for is for Costco to decline into this time period. We want this support zone to hold, and just like Slim was showing you on the XRT, this would be a favorable buy zone, and that would be from 853.64 on the top down to 830.48 on the bottom. So we want to see this support zone hold, and then we want an entry signal. That could be a return to positive momentum on the 2-hour chart and or a momentum continuation signal down here on the slim ribbon PO. Now I posted an options trade idea for this setup in Costco this morning. So if you would like to see that video, please consider becoming an askSlim level 3 or 4 member. And I'll turn it over to RV.
All right, thanks so much, Katie. Great job on that. Let's go ahead and hop over to my screen. Take a peek at Meta. Meta is doing actually quite well relatively, holding up just below old swing highs. Let me share my screen here. Give it a second. Okay, you should be able to see it. So let's pull up the weekly cycle analysis for Meta. The reason this is interesting is because we are holding just below old swing highs here at 542 that formed in the early part of July. We had a test that looked a little bit early. I was really thinking that we would see one more test lower, and now it looks primed to really do so. On a move through this old high, again, you have levels up here from 565 up to 603. Again, this is a noise move down. So we have now looked back at the old highs, and in my view, is poised for still yet higher. On the daily time frame, you'll see that there's a trough also due here, 820 to right around 9.3. So this move up looked a little bit early. You can see it actually looked through old highs, saw no buying, and then trapped longs, and then is now getting some selling. There is this old low here at 522.76. I will look for it to get sold through that, and then to get a faster move down into the trough, see that form, and then look for this to curl, really right back to the upside. Right now, I'm looking at this zone here, 518.5 to 511.5. Again, we aren't there yet. So if we see, I would say good action going down into it with, which would be faster action down, that would be ideal. Then watch for this area to hold, and then I would be looking for a move back through this old high here at 544.23. If it loses this level here at 503.50, that would render this idea not valid. So we're looking at a risk of somewhere around 15 points, and we're looking for a move up of about 26 points, right? So that is favorable. So let's just keep our eyes on this. Again, I'm always watching the price action. It has to be a fast move down into those levels in order for it to be valid. Okay, so that is our look at META, and I'll go ahead and hand this off to you, Matt.
Excellent. Great work, team. All right, I'm going to share my screen here. Should have a side-by-side with Uber Weekly and Uber Daily. Uber is the symbol I'm looking at today. And what we're going to do is we're going to walk through the core trade planning questions and how we use the askSlim methodology to answer those. So first, as always, what's the outlook period? So as Slim, when he was introducing this segment, said that we each have an outlook period. It's really important you identify your outlook period, because that's where you're going to want to go to those specific charts that help generate the information necessary for that outlook period. So we're looking at an intermediate time frame. My directional bias is long, so I'm going to step through why that's the case using both the weekly and the daily charts. And then we're going to look at key levels. And then from that analysis, does there appear to be a clear edge? And when going through Uber, that seems to be the case. And then we'll look at what are some signals that would suggest that the trade setup is a go. But first and foremost, it's most important that you always make sure that your risk money management and position sizing rules are always in place. Okay. So we're going to look at this. We're on the left-hand side here on the weekly chart, and we're going to start with the key low here that formed in October of 2023 here. You can see that low here. And we had this massive move that accelerated off of that low. And Uber basically went straight up for a number of weeks. And then it ran into some resistance. And if you go back and you look, the resistance was from its prior all-time high, which was back here in about February, March of 2021. It was around 62 to 65. And so you can see that was the case. It got up near that prior all-time high, backed off for a couple of weeks, got actually down. We'll do some fib analysis here, swing high, swing low analysis. So from this cycle low up to this swing high, you can see it got down about to that 23%, 23.6%, and then another move higher, another impulse to the upside. Now, if we do a swing from the cycle low up to that swing high, oops, let me go over to my fib extension tool here, because what we're looking for is where could that new swing take us. So we have a swing low in place. Move up to this swing high, down about that 23.6%. And then we see our upside, and it just about tagged, got a little bit above that 100%. So that's a typical area we like to look at, that from about the 61.8 to the 100% of the extension of a swing. And that's where Uber got up to. And then it consolidated for a few weeks, and the buyers gave in, sellers came in, and then you had your peak that formed. And then that went into an ABC correction, and we got down to about the 61.8%. So if I take this cycle low, again, that swing up to the peak, you can see it came down and just about tested, tagged that 61.8, and then it reversed course along with so many other markets and securities here in early August, and has gone back into a very, very strong upside advance. So that's sort of a look back at what has taken place. Now, looking at where we are now and where we're projecting. So on the weekly chart here, we've just entered into a new rising phase. So if you look at the blue dominant cycle here, there's a couple cycles that are showing influence, but I'm looking at the blue dominant right now. We are early in a rising phase. The reversal scout, our weekly momentum indicator, is turned up, confirming this new rising phase. We've already closed above the 61.8, intermediate 61.8. If we hold where we are right now, today it'll be 2 weeks. So the bulls are showing their hand right now. So there's a firm advance going on in the weekly. And then if we move over to the daily, we can see here that here's our cycle low that formed. We had a prior cycle peak, and we've had multiple closes above that 78.6. So repairing that technical damage that had occurred with this huge move off of, not only was there that key market low, but then the earnings came out, also supplying more ammunition to that upside. So we have a warning of a positive cycle structure. We haven't broke through that cycle peak yet. Obviously, this is extended in that near term, short term. However, very strong. Both momentum in terms of reversal scout and the slim ribbon are positive. And so that pattern, the patterns that we currently have, along with the momentum conditions, suggest that we go back over to the weekly over the next 4 to 8 weeks. We should push through this intermediate 70.6. We might chop around a little bit here, get a pullback. That wouldn't be uncommon. I'll show some support areas, but this target zone here, which runs from about 80, 85 up to that prior all-time high, is the projection based on the current conditions. In terms of reevaluation and supports, first, the support levels to watch for are typically the slim ribbon on the daily. So we're going to watch for the slim ribbon to act as support as it's doing so. Even today, you saw it come in, test that first band of the slim ribbon, and now is near the, looks like the highs of the day again. So very strong, continuing here in Uber. We're about mid-cycle. Again, could get some pullback. With something this strong, you could really just take off. So there's another, in terms of reevaluation, I'm watching this 23.6. If we got a close below that, which is near the third band or the 21 EMA of the slim ribbon, then I would look to reevaluate, likely negating that projection. However, to really damage this pattern, I'd have to see a close below that 61.8, which is a long ways away. So right now, very strong in Uber, good upside potential. All right, Slim, back to you.
All right, great work by the entire team. And just love seeing how we all put this very unique style of analysis together and are so adept at it. Just great stuff. I want to remind the people that are participating here on our Zoom link for the show, you can now put your questions in the Q&A that you might have about our analysis, about any individual stocks or futures, or about any trading issues that you might have. Now is the time to do that. We'll be getting to that shortly. All right, this is Matt's review of our services. He does this every couple of weeks, and he's going to bring you our level 4 special. Matt, I'm going to hand it back to you.
All right, very good. All right, we're going to make this short, but we're going to get pretty thorough here with what we're going to offer. I'm sharing my screen. I know everybody's excited to get to our evaluation segment in terms of the audience symbols. All right, you should see the home page here of askSlim. If we go to our become a member area, you'll see that we have 5 premium memberships that we offer. And we have 4 levels here, what we call our core membership services, level 1, 2, 3, 4. And really what happens as you go higher in the membership offering is that you get a broader and more extensive technical analysis coverage. So that means the expansion of the markets that we cover, the timeframes that we cover, the stocks that we cover, the ETFs, futures, as well as then you get direct access to our charts, our custom indicators, and our trade planning tools. And so that's really what we're going to talk about today, which is level 4. It is our all-in top tier membership level. We do have a special that we're offering, and really it's coming at the back end of something new that we started a few weeks ago, which was a test drive initiative. So there was a number of you that had an opportunity to be able to test drive our MCM Pro applications, which I'll show here in just a second, and then also our day trader service, which is a standalone separate premium membership for those of you that are day traders. And today we are announcing our special for level 4, which will give you continued access to the MCM Pro and also everything else that comes in our levels 1, 2, 3, and including all of the custom and proprietary indicators and chart grids. So everything that you saw the team today use as part of our setups, right? And we have trade setup grids for multiple different time frames. The team uses this, as we call this, our raw chart stream grid. We have multiple time frames here, from weekly, daily, 2-hour, 15-minute, really being able to give you so much key information when it comes to bias, when it comes to signals, when it comes to position sizing. So these setup grids that we have are part of our level 4 membership, which we are offering today as a 35% off special. And I'll show you where you can get that in just a second. But I really wanted to come have a focus of the charts that we offer, how you can follow along and really accelerate your learning curve as a level 4 member. Also, the MCM, which for those of you that have been using it for the last couple of weeks or even up to 3 weeks, that is going to end today. So that test drive will be over, but you do have a chance to continue at that special pricing. And I'm going to just pull that over here so we can take a look. Just taking a second here to load. All right, here comes the MCM. This is our Pro version. So what I really want to show is that we have, there's 2 different types of views, a time frames view and a trader view. Time frames view, you can select a type of time frame, and then you have the opportunity to see our 2 most dependable momentum indicators. So this application runs in real time. We have real-time data that's coming from the CBOE and bar charts. And in the background, our momentum engines are showing what the conditions are in these different time frames. And then we've created a trader view where you have the ability to utilize the engine, and what it's doing is it's combining multiple time frames and generating a sum of the evidence trade setup condition. And you can sort within these trader type time frames by clicking on the trade setup condition, and you can instantaneously see those symbols that are most bullish to then most bearish. And again, our system in the background, our engines in the background are crunching the data in real time all throughout the market session for these various trader types. Then you can go into the near term, do the same thing. You can look at, we have over 115 symbols in here. So just an excellent variety of symbols, ETFs, country ETFs, and then also for intraday. And then what's great is you can hone in on a specific symbol and you can set up alerts to be notified when there are changing conditions. So this is extremely helpful if you already have a position. And let's say that you're a near-term trader, but you don't have time to monitor all of these symbols and you want to be notified if there was a change in conditions. So let's say that you had a position on in Toll Brothers and it was either near-term or short-term. You could set up a notification that if it went neutral in the intraday or slightly bearish or bearish, you'd be notified. and that would likely suggest that something's changing. You could take a look at that. Maybe that you would want to monitor, take some off of the position, or maybe you're looking for another opportunity to re-enter a position as well. And then you could set up a notification. So let's say that we go to, you're looking at natural gas and you're looking at that one, and you thought that it was a low was forming in there. And right now it's very bearish, so we don't want to take a long side position. But if you saw it turn to bullish, it might suggest that something is changing in that near term. And then you would get a notification, and we have a separate desktop application that you can use for that. And I'll pull that over, and that runs in sync with our MCM application that I'm showing. And you have a recent messages feed here that gives you all of the most recent updates or that you have selected for yourself. So this is a custom notification system. This is not one that is generalized. So you're the one who can set these alerts for yourself. You have up to 50 subscriptions that you can set, and you'll get notified when there is those changes that you've elected. Right now I have this is connected to your desktop. So right now I have it connected and I have it on snooze. So I'm not seeing those pop up while we're in the webinar, but when we're off the webinar, I can turn that back on, and then I would actually see within my desktop application itself, my Windows application, these messages also pop up. So this is a very, very, very powerful tool for many reasons. One is that for us, it's best practices not to trade against momentum. You want to be very aware of what the momentum conditions are, what those momentum conditions are for various time frames. And then to go beyond that, you have the ability to set notifications for when those changes are occurring. We all know that it is impossible to watch more than a handful of symbols at one time. And so this system can do that for you. All right, so getting back to the current promotion that is running, again, we have a level 4 offer that is available. I'm going to go back to the home page right now. And really, you can access it anywhere because this button will appear. So click on the level 4 special, get 35% off. That'll take you to the purchase area. There's more information regarding level 4. Then you can click the buy now and you can subscribe. If you have any additional questions, you can always reach out to me at matt@askSlim.com. If you're currently a member looking to upgrade, you can reach out to us at team@askSlim.com, or you can message us on Discord. All right, Slim, back to you.
All right, thanks for showing. Great job on that, and it's just a great way to see the immense amount of information or analysis that we provide. Matt and I were having a discussion recently about, what exactly is favorable results? Does it mean that you're going to always make money? Do you measure it monetarily, or do you measure it by the amount of education you get and how you improve as a trader? I think that's important, especially based on the work that our team does, is that, we're bringing you the ability to learn so much, especially me, through 50 years of experience and this very experienced team that we have, that altogether it's up near 100 years of experience. And really some great expertise in the market. So, your success is our success. And that's what we want to really do, is to, for you to be able to measure your success by how much you're learning, how skilled you're getting, and for your ability to be able to withstand the pressures that come from trading, because it's trading, you're going to make mistakes 50% of the time, or 55 or 45% of the time. If you're a heart surgeon, you only get one. So, it really is very different. You have to live with things going wrong, and especially to become really good. And so you have to learn about how to do that, how to withstand the pressures from trading. And I think we do a great job in helping you find ways to really withstand the challenges of being a trader and to be able to keep improving. That's our goal, is for you to be able to measure your success by how much you learn. So great job by everybody. All right, so I wanted to, we're really getting filled up on questions, so I don't think we're going to be able to take any more. Thank you for all of you that have put in questions. And for those of you that sit through these promotions, it's really important to us, because that's how we keep bringing the information we do, because we keep building our subscribership and keep building our development so that we can improve all the time. And that helps you. All right, this is our Q&A, levels 1 to 4. Those members that are 1 to 4 are participating in this show and have put questions up in there. There's questions for me regarding, I'm going to do the futures side of this. And anybody who has a question about the indexes, that's coming in my index analysis after this segment. I see for me, there's Vips is asking for TLT and silver, which I will do. And then for our analytical team, based on what they have available, they're looking at Tesla and Baidu and XLU. If you have XLU, if you don't have XLU, I have DJU, which is the utilities. And then the SMCI. David, you're asking for VIX. I have time. I'll look at that in the index analysis. So let me just answer one question that's in here. Claude asks a good question, and that is, in the August 2nd show, Slim mentions risk posed by the US dollar JPY carry trade. The following week, the S&P 500 got sledgehammered, as he said, down before recovering just as fast. He says, my question is, some analysts out there say that the carry trade hasn't fully been unwound yet, and there's more to come. What does Slim think? Well, actually, I've recently talked about this. It's pretty hard to unwind 10 or 15 years of getting into a trade in a week. I mean, it's just not possible. And what happens is that the weakest hands, that are the shortest term traders, are the ones that cause that kind of anomalous volatility. And many of the bigger traders, the vast majority of the big holders, they're going to hang in there because they can afford to hang in there until it really gets to be a challenge. I think dollar weakness is going to be a significant issue for many, many months to come. And based on what I see in the yen analysis, I think that the next 2-3 months has very strong yen, or very weak if you look at it as the US dollar versus the yen. So I think we're going to see a lot more of that. I think we're going to see periods where we get big spikes in volatility, and that may very well be based on strength that's in the yen. They really get forced to act. And the next time it'll be longer term holders, and maybe it'll be with more depth. And I think we're going to see a lot of that. Again, you don't unwind decade, 15 years of getting into a position in a few days. It just doesn't happen. And I think that those think there's more to come in unwinding that position. I think they're right. So I wanted to answer that question first. Thanks for that. All right, so Vips, I'm going to look at TLT and then at silver, and then I'm going to turn this over to the team. So let's take a look here as we look at TLT. That was one of that you asked for. So TLT is in an extremely strong cyclical configuration. So what does that jargon mean? What it means is that the cycle patterns, and you can see right in here that I was looking at this grayed out cycle that has lost dominance, but it still has some dominance in there. And looking at this blue one over here that has taken over the dominance on the shorter term. And you have the bigger ones in there that are really strongly dominant cycles. So the ones that are the most dominant are the ones that are the biggest. This right over here, this cycle we're in, I'm just going to show you these last two right in here, because those are the ones that are really important to this question. And that is, this cycle was the first minor cycle in this big dominant cycle that you see here. This is the second one. So this one is kind of an inside cycle. It's come here, tested the high, which you would think it would do based on this positively configured cycle and the strong upward momentum that you see in here. So now what we're looking at is a potential corrective period out over here in TLT or in the for a pullback in the treasuries. And also that would mean a bounce or an uptick in yields, because they've gotten really very low and have a lot of Fed cuts baked in. In fact, they're baking in over the next year about 200 basis points of cuts. And I can tell you right now, the probability of that is near zero. Unless there's an absolute horrible recession, that is not going to happen. So, and of course, if that was going on, the stock market would be getting crushed. So in this case, what we're looking for is a corrective phase in here that sinks near the end of October. What does that mean? What it means is that this declining phase right over here aligns with the declining phase over here on the daily chart. So I'm just going to blow this out a little more on the daily chart. And you can see again on the daily chart, these strong cyclical formations right in here. You can see the slim ribbon PO on this break, and then where it started to move up again, giving you upside momentum resumptions. The slim ribbon strong right in here, and that telling you about the strength in the market. Now, this only has a little brief period in here for a potential pullback. This right over here actually looks like this right over here, as you can see, where this was translated so far to the right side of the cycle that there was very little time for a decline, and then it moves up sharply. Here you could see it only declined for about 3 days. You could see that 4 days, and then moved up again to test those levels. That's what we see in here, the potential for a pullback. However, as I showed you on the weekly cycle, it's really nearer the end of October where this corrective period ends. That's this cycle right over here. If I look at the date, October 25th, that tells me a break, a rally, and then another extension of this corrective period on the weekly. And that tells me it's a range-bound situation right now for the TLTs. Yes, could get up over 100, maybe 101. Yes, could pull back over here to 96, maybe to 94.80 in that area. But that basically defines the range that we're looking at between now and sometime out in late October. In late October, it actually, could get maybe a little bit further down. But that's really a very bullish condition. And then out over here, as you look out over here in November, October, November, December, late October, November, December, this is a period where it could get another sizable rally. This aligns with the period. I think there is a lot of downside risk in the stock market. So, I mean, you can see how these correlations work. That's my look at TLT VIPs, and I hope that is helpful to you. Let's just look at silver /SI, which was your other question. And we're going to look at silver here on the side by side. And what you can see in here is that this decline right over here made the trough of this cycle here. That was just a little bit later in the cycle pattern with the gold. And this is the gold cycle right in here. I like to keep them together because, of course, they're going to act together. Now, the silver cycle actually shifted over a little bit because this made its low early because gold and silver wanted to make their low in this time frame. So that happens because this is dominant on the weekly. So we look for the potentials of shift, which we did adopt. I'm going to blow this up right over here. And now you can see the rally has gotten it up into this resistance area. Now you had this negatively configured cycle right in here, which says that there's a pretty good chance that this will struggle up in this resistance area. We'll call the resistances here 29.28 up to about 30.85. That's what we're looking for in here, with a chance for it to get up to this high and these cycle peak resistances up near 32. So this is a favorable period. Momentum in here is still neutral, as you can see right there on the daily chart. Momentum in here on the weekly chart is still negative. That says to me that while it's improving and while a rally is coming in, it has work to do still. And, if we're talking about the potential for a bounce in interest rates, well, that's not a favorable condition for the metals markets, which I think are going to have some corrective periods ahead also. Now, I am very, very bullish when it comes to the longer term. And when you get this coming up here to the near 32 area, and then maybe a pullback over here sometime out towards November or so, not exactly sure how that shape up. But then you get into this period over here where you could get much higher prices out there, and that's November, December out into early next year. So you could get some periods of chop in here and it not breaking out on the upside because this is a pretty good resistance area. But overall, when you get this powerful type of a shape in the cycle, the next one has a very high probability of taking out that high at 32.75. And I think it could get much higher than that based on monthly projections. So overall, long-term, extremely bullish. Short-term, probably looking more like a choppy period ahead and more work to do until this momentum does improve. That's my look at silver. Thanks for those good questions. Vips, I can always count on you for something really valuable. And I'm going to turn this over to the team to look at these other symbols. You can take it, Matt and Katie.
Okay, let me share my screen. I am going to start with Eli Lilly. Let me know when you can see that.
Yep.
Okay, great. So we have positively configured cycles here. They are ending higher than where they began. And as you can see, each one made a new high, breaking above those prior cycle highs. Here in this current cycle, we fell down below the 78.6% when we had that big market sell-off. And then the lower probability occurrence happened where we made a new high in the cycle after having retraced all of that way down. So we might get a little bit more upside, but it's really struggling right around this area. You can see we had this bearish engulfing at the top of this target zone and backing off from that area again too. We do have a timing window that starts at the end of September and goes through mid-November. Momentum has shifted back positive, so we again could get a little bit higher in here. We'd have to see a decisive breakout above this level. If we switch over to the daily chart, you can see what that looks like in detail here. That's that prior cycle peak. Tried it for that again and fell back below it. And now we do have the declining phase of this cycle coming up. And that runs from 8:30 to 9:10. So we will see what kind of a retracement we get in here. And then I would expect in the next daily cycle, if the support zone holds, to make another attempt for that prior cycle peak. That area right around 970 to 975 is a strong resistance area. And then we are getting late into these synced cycles where the shorter term cycle syncs with the weekly cycle timing window when we would expect some weakness to start to develop. That could come in this cycle or out here in the next one. This second cycle out further is the November cycle, but we'll have to see what kind of a retracement we get in here. Momentum is still positive, so there's nothing right now that says to be bearish. Let's switch over to Baidu. Baidu has a series of negatively configured cycles here, each one ending lower than where they began. We have negative momentum with our reversal scout now, and a timing window that is coming up 10:14 to 11:22, targeting this. This is already broken below this 100% extension. So at a minimum, we'd expect a retest of that level or perhaps down to 74.71 in that autumn time frame. If we switch over to the daily chart, We have a dominant cycle here, 54 bars broken into minor halves. So here was that breakdown and then up into this sell zone. And we're backing off from there now. We do have kind of mixed momentum conditions. The reversal scout is still positive, and the slim ribbon did improve to neutral from negative. But we are getting into the declining phase here, so we'd expect this to continue down and retest that area, or possibly down even as low as the 100% extension. That was the $74 level that I talked about from the weekly chart. Tesla was my last symbol. And on here, you can see that we got that mid-cycle bounce. It had just broken slightly below the support zone. And so we would expect perhaps some attempt to get back up into this area. However, we do have negative momentum now with the reversal scout. So that may keep this from getting too far. We do have a timing window coming up 10/7 to 11/15. This is going to be a period of risk for many stocks. So that autumn time frame, we would expect to retest this level or perhaps down to the 78.6% fib at 167-ish. Switching over to the daily chart here, we did get up into that sell zone, and now this may configure positively in line with what's happening in the indexes. As a rising phase of the minor half cycle over on the weekly. You can see that right here, this minor half cycle moving up. So as a cycle that corresponds with that, this could configure positively. We would expect this support zone to hold and then for weakness to develop out in one of these later cycles. We do have a positive reversal scout, and the slim ribbon has improved to neutral in here as well. Timing window coming 8:30 to 9/10. We would expect this to hold and then weakness to develop later in the fall. That's my part. I'll switch it over to Arby.
All right, great job. Thanks so much, Katie. Just slightly losing my voice here. So working through a bit of a cold, so sorry for the hoarse voice. You can see that on the intermediate term, give it a second to share. Okay, let me know if you can see it or not. It's
Yeah, I can.
yeah, okay.
Excellent.
So
Yep.
we formed our trough back here. You can see we then turned back up really right on time. A very nice bull flag that had formed here. And then there's a nice higher low. Once again, this is the first trade long off of the trough. This is the second trade long off of the rising phase. Now we are well into that rising phase. There's a 61.8 to the 78.6, from 76 to right around 78.40-ish. And we'll be looking for a rally a bit higher and a trough that is due to form. You can see 1014 to right around 1125. Overall, this is still a positive pattern on the intermediate term and still in a rising phase. If we go ahead and jump over to the daily time frame, we are seeing a pullback into that rising trend be bought here. You can see the nice bull signal that showed up here as well. So all this is following through very nicely and confirming the upward bias that is there. There is a zone from 76.20 to right around 77.10. We are looking for a move into that zone in the short term. If we go ahead and jump over to SMCI, you can see that there was a trough that was due here. And we formed that low really right on time, and we are now getting a pop. The overall structure, however, on the dominant cycle is bearish because we have lost this low here. So the highest odds are we would be looking for a rally just into this zone from 681 to at best 812, and we have our next trough due 10/7 to right around 11/11. Now the highest odds here, based on what I will show you in a minute, is that this is going to chop its way higher and use up some time here rallying into that zone. Let me just highlight why. You can see right here on the daily time frame, there was a trough due here 7:30 to right around 8/9. We are seeing a sideways chop here versus this zone on the upside from 660 to 776, and on the downside there's a zone from 576 to right around 538 or so. Our next trough is due right around that 9/5 time period, so we'll be looking for a dip down, put in the higher low basing cycle, and then get a shot back to the upside into these zones that I just highlighted on the intermediate term. That really looks like the highest odds here. So we will be looking for, again, waves on the upside over the next month or so, and then risk to pick up again after that. And I will go ahead and hand this off to you, Slim.
All right, great work. There's one more question that I want to talk about. Let me just get this back. Okay, there's one question here from Jeff, and I think it's really a good question because we have so many students of our style of analysis out there. And he says, just curious, using the same askSlim methodology of cycles and timing, if your tools were to use for identified peaks and tops versus troughs and bottoms, could that be insightful or useful? I can tell you that some cycle analysts, there's not a lot of us out there, do use inverted cycle brackets to try to measure tops and see if they come consistently. I have rejected that, and my team has learned from me that the measurement of consistent links at tops or peaks is not valuable. What's valuable is understanding what tools you can use along with it to see where those peaks are developing. Now, what's really important about that is what we call translation. In other words, what part of the cycle does the peak develop? If it develops really early and then comes down and takes out the levels of where the point of origination is, then that is quite negative. When it moves up strongly and then makes its peak and translates on the right side of the cycle, there's very little time to decline, and the declines are shallow, and then the market goes to new highs. So we use other measurements, especially our momentum indicators, to see where those peaks are forming. We also use candlesticks, which you'll see me illustrate in a minute. Those are some ways that we decide when a peak is forming. One of the key ways that we do is by using swing high, swing low analysis and defining support and resistance levels. And when a peak is forming in one of those resistance levels and then resists and then turns down, then we get an idea about that peak beginning to form. And then if the momentum conditions tell us that's accurate, or the shorter term indicators or what we look at in the intraday tell us it's accurate, we get an idea that peak may be forming. So there's a lot of things that we look at for peaks, and the information of the location and the timing of the peak is what is most valuable to our style of analysis. I really encourage, if anybody is listening to that and saying, well, I don't know what the hell he said, please consider our cycle analysis workshop. And at the very least, go to that tab up on the top of our front page and watch the free video there and some of the information that we have there, and you'll get an idea. Those people that have taken our cycle analysis workshop are really students of the work, and we have many of those that are in the room right now. So thanks for a great question. Okay, so we're going to move on right now, and what I want to do is get into the stock market analysis projections, and the important information is, how we present our analysis and what it means, and how you would, adopt our analysis into your own trading. One of the key things we always talk about is trade ownership. No matter what we say or no matter what anybody says, you're not going to be successful if you don't own that trade. You have to make your own decisions on when to get in, and don't wait for anybody to tell you when to get out. It reaches the exit levels, whether it's a win or a loss, you have to then really think about your own actions, and it has nothing to do with anybody but you. You want to be successful, own your trades. All right, one more thing before I get into the analysis. Matt did a great job showing you extensively what's on our level 4 special. Please do go to the top of our website where it says level 4 special offer, get 35% off. and consider signing up for level 4. It's best if you are a member of Schwab and have the Thinkorswim platform. There's still great stuff there for you if you don't, especially our Market Condition Monitor Pro, which he demonstrated. So if you didn't see that, go back and watch Matt's demonstration of this level 4. So please do go to our website, take a look at that, and sign up for 35% off for this 3-month membership. All right, stock market, multiple time frame analysis and projections. I'm going to look at the S&P 500, NASDAQ, and Russell, our proprietary indicators. I think it's just an unusual way to look at the markets the way we do. And you're going to see as I open this up and move over to this chart right over here. This is the chart this is the chart grid that our members get, that have the S&P 500, NASDAQ, and Russell in there. And we have weekly, daily, the daily momentum, and intraday 2-hour charts that we look at with our proprietary studies. And I'm going to blow this up and talk about the analysis that I shared a couple of weeks ago, which at the time I said we were in a declining phase and likely to rebound, but I never thought the rebound would get through resistances. The reason for that is because the highest probability is when you threaten, and now it didn't close below this, the 78.6 warning level, that you then have a very low probability of getting back up to the high. And our analysis is probabilistic. Now, I got to really hand it to RV, who said, well, this really looks anomalous, and we didn't close through there. And Matt says, well, you left, the bar came right back up. So this is where that weekly bar closed. They were right, and I was not. And, maybe some important lessons in there about, letting these things develop a little better. But I had us moving up into the 78.6 and then the market turning down again. And these projections were coming down here to the 4,800 level in the S&P 500. Now that this has come up here, now that causes me to raise all the analysis and projections back up to where they were, because this is now disproven my analysis and gives us new data, new messages. And our analysis is flexible. Lots of people watch our analysis for the first time and they think we're moving goalposts, which maybe we are, but that's because we get new data and we always want to show the highest probabilities. Let me be clear, the lowest probabilities sometimes happen. That's why they call them probabilities. So now what we have is a flattening out over here of momentum, but still not in the greatest shape. The minor cycle in here bottomed exactly on the day that I projected weeks before, and then turned up as expected. Again, this rally is very strong. And as the investors pile back in. I said early in the show that I thought the market for short-term traders could go to new highs. And that is something that we have to respect as traders. As investors, we're looking at, 200% market cap to GDP, historic valuations in here, and a volatility condition that happens when markets are not healthy. And I said also in the beginning of the show, I'll be bringing some charts in the future that shows you how this is how markets top. And that's probably what's happening. But topping phases are 4 to 6 months. So we could get a lot of movement on both sides. We have to be very open to that possibility. We are now in this minor rising phase right over here with momentum on this weekly chart flattening out. When I switch over to the daily chart, now before I leave that, this period of risk doesn't change. From out over here, September, November is where I think there's a good likelihood of a very strong break to the downside as we move into that election period. Now here is the daily chart. You can see again this huge break right in here. And I talked about a break into the early part of August, and that is exactly what happened right in here. And then this rebound getting through the resistances. And now we're getting this flattening out over here. Now I want you to notice somebody just asked about, using cycle analysis for tops. We actually don't do that. We look at the location. This is kind of midway or a little bit to the right side of the cycle. This is an engulfing pattern. And today it tried to rally and it's kind of stopping in here. And that is the up near these all-time highs. Now I'm going to show you a little bit different when we look at these other indexes. Now, when we look over here, we got a bottom warning right over here, an orange dot that actually disappeared because of it has a built-in volatility part of it, and it was just barely in the extreme oversold category. It came right on time. I'll show you that in the other indexes. And now you could see right over here, these big green dots as the S&P 500 became positive. This is our option bias study. And you can see right over here, or the timing right here is where it told you bias your option positions to the short side. Now, right over here, when it got through my resistances, it's telling you, well, you have to bias your option positions to the long side. Even though we look for a correction in here, you could see the rally now is getting to the right side, and this translation is likely to bring you a correction over here into the downside in the S&P 500 that is likely to bring it down to somewhere right now, because these are rising, so it might be a higher level of around 54.40. So that would be about 170 point corrective period right in here. Now, there's also a 23% that I don't have in here that could be higher. And the longer this stays up in here, the shallower that correction will be. And then when we get into this rising phase right over here is where I said, you know, short term, we could get to new highs, and that could get you something, whoops, looking like this right over here, getting up to those resistances or up to new highs in that next cycle, taking you out into sometime in September. Now, early September is where the VIX is telling us that it's likely to tick up again, and I'll show you that in a moment. So this is a look at the S&P 500, and you can see here it is turning positive on the option bias indicator, which it did 5 days ago. Now here you could see the momentum conditions, and here they turned negative, as you could see, and then as the market rallied, they went neutral, and then they turned positive again here on August 16th is where that turned positive, and where our algorithms began to get more positive also. So momentum strong here. You can see the slim ribbon PO. This is about to turn up and give you a green arrow, and that would be, you know, an indication that momentum is still strong, and we could resume some upside movement in here in the market before it goes into that corrective period. This is a 2-hour chart, and on the bottom end here is the MCI, the market condition indicator. This is just fabulous, because what this shows you is the 25 and minus 25. When it comes down here through the 25 and doesn't get under the minus 25, it tells you that the longer term indicators are preventing getting a bearish signal. And then when it moves up back over the 25, you get a positive indication. And that happened over here on August 15th, right there, where it gave you that positive signal. And here you could see the slim ribbon and the 2-hour positive. This is the whole period here where the slim ribbon turned positive right there. That was back on August 12th, right there. Here's where it was negative when the market was moving down. So what this really is 2-hour short-term directional decisions. For those of you that are intraday traders or short-term traders, this is really a dominant part of that analysis. When this is moving up, when it's green, then being short is most often going to be wrong. Being long is most often going to be right. And we got this signal back over here on August 12th, quite a number of days ago. Really strong as far as that goes. So that is a look at the 2-hour. Now, I see somebody put up a question about sharing the analysis on the 2-hour as far as cycles go. I only have that available for level 4 members. And if you're a level 4 member, I don't know who's asking me that, and you want to see that, then you can send that to me and I'll send you a link for Thinkorswim. That's the way I would share this for a level 4 members, or take advantage of our new level 4 special. So that is a look at the S&P 500. Now you're going to see somewhat of a different story looking at the NASDAQ. The NASDAQ did break that 78.6% level, though it didn't close below it, as my team would tell me. And that influenced me to be more negative. And you can see that here, it's still in the sell zone. So sell zone here between the 50% right there and the 78.6. If you can get a close up here through that repair level, that's the 20,000, sorry, exactly at that level. That would vastly improve this. It's a lot of the mega caps, the leaders in tech, they look broken to me, quite a number of them. They've had big rebounds, but the patterns are still not great. And as Katie said earlier in the show, this period out over here is a period where there's a lot of risk in a lot of stocks. And that's why we're looking for this period out into November, starting sometime in September, to be a window of time when the market could move down sharply again. So in this case, we didn't rally as far as we see in the S&P 500. When I look at the daily chart over here, you can see again that engulfing, and that one comes under that 78.6 repair level. But just in case it does get through there, I want to show the next level up over here, which would be testing that high at around 20,700. At that all-time high right over there. So I'm showing this upper track right over here because it is a possibility. But then again, I think the highest probability is that it will waffle around over here and then test this area right around 19,000. And then after that, after it does that, we get into that period where it could do better again out over here. Now, this rally period out over here, or this favorable period, I really see as not getting deep into September because of what I'm seeing in the VIX, and I'll show you that in a moment. Again, this is where the bottom warning came in. This option bias indicator, when it turns orange, it is phenomenally good. And that's where that bottom indicator came in right there. And you can see how fabulous that was. It is still yellow, neutral right over here. It hasn't really been able to improve yet. So here we see momentum here on the daily chart has turned positive. This slim ribbon PO on the bottom about to give you an upside momentum signal as it turns up over that 25. So that would be a positive occurrence and extend out the nature of the rally. Here again is what we saw on the S&P 500 as where the 2-hour chart was telling you if you're a short-term trader, this is the place you could expect to be short. If you're a short-term trader, this is the time frame you could expect to be on the long side. You can see that right over here, and here's where it turned up right there again on August 12th. Short-term traders were really influenced in here to keep their biases on the long side. Nothing to do with what I said or being negative or where resistance was. If you're a short-term trader, these are the things you need to look at: short-term momentum, and really have a strong guide for you on how to manage your positions. Again, we have the positive upturn over here on the market condition indicator on that 2-hour chart. Here you can see on the Russell something different, but actually changing. As today, we have had a very significant change where we have a revival in this index. It was really lagging until just today, getting into this resistance area, but getting up nowhere near where we had the resistance levels, or nowhere near where the S&P 500 had rebounded, but now much stronger as we look at this again. You had that engulfing here on the weekly, but that bottom came right on time. And now you're in this rising phase, getting through this resistance. And I think it's going to easily get through that 78.6 repair level right over there and through that 61.8% extension, and then get up to recovery highs right in here or higher. It seems to me that based on what I'm seeing as action now, that the small caps and mid caps will lead the market to some continued strength in the near term, short term, and get up over here. This right over here, this level is 2286. This level over here is 2328, 29. Those are kind of levels that I think we should be looking at here in the Russell, as this is still a positively configured cycle right over here. and testing that high, just as the S&P 500 is doing, is now making sense to me as we see this rotational change in the market and a small cap revival. Remember, small caps borrow money because the companies lose money, most of them. And so they have to keep borrowing money. Interest rates go down. It's good for them because their costs drop as far as the cost of money. And that's why money starts to move into the small cap. So we're going to look for continued strength in here as we see this on the weekly. Here you can see on the daily, it's already taking that upward track that we have in there, and that's that level of about 2230, 2235. And if it gets through there, if it get through that level, well, then we'll be projecting to that high. Right now, again, it looks to me like there'll be some kind of a pullback in here. But then after that's over with, this move into this early September period right over here really looks to me like the one that could get up and test those highs right there. So that's what we're looking at here. These are positively configured cycles that are likely forming in here. That means wherever this peak is after a correction, that peak is likely to get taken out on the upside. So if you look at that configuration, how positive that is, I'm just going to go back to the S&P 500, and you can see in here that configuration of the cycle is very positive. These all say correct and then get above these highs that we're in right now. And the NASDAQ, the same thing, positively configured cycle, correct, and then move back to the upside. Have had lots of questions about the VIX, so I want to bring the VIX in right now. The VIX chart right here is saying to me that the correction of the upward movement that we're in right now, or the correction in the VIX, has some period to go out into early September. So that would be maybe another, couple of weeks that it could move out over there. When I look at the weekly pattern, and remember, we were talking about this potential upside move in VIX, though in no way would I have been projecting it to get up to 65. There, where this period right over here moves up in September, there could be another big upside spike. That would be right in this time frame right over here, and then probably come down again where this cycle comes down again. So I think that we're going to be in a period of elevated implied volatilities based on this higher volatility that we saw come into the market, and what I think is a long-term top that is starting to form in the stock market, which will take many months and probably have many moves of size in both directions in the stock market. This period right over here, October into November, is that period where I think there is risk of another one of these giant spikes. And that's the period that I'm talking about for the stock market to have that sizable decline here in the S&P 500 out in that October-November period. That's what the VIX looks like. And that is my analysis on the stock market. I want to remind you, if you're new to askSlim, start learning from this team of pros. Build your knowledge. Look around at our broad content of education and analysis for traders and investors. Team, I think we did a great job.
Yeah, that was fantastic.
Great
I
job.
just want to
really good.
say
Go ahead,
one thing really quick here, Slim. And that is you could really see the coach come out in you today. I think it's and I have our testimonial screen up here, and I'm going to just scroll down because it just reminded me of something really important that I think you've passed on to RV, myself, and Katie, and we want to carry that on to what we deliver to our members, and that's authenticity and integrity. Beyond a legacy of technical analysis and trading experience of 50 years, the ability for you to continue to strive for the highest level of integrity and authenticity is more important. And you can see here, this was 20 years ago that I wrote a testimonial because I hired you as my trading coach, and that was the one thing that stood out more than anything was that authentic integrity that you demonstrated, and having that confidence then to be able to get through, as you said, the difficult endeavor of profitable trading. So those skills that you impart on us are so important. So I just wanted to say thanks for that, and being able to share that with
Well,
our members as
You
well.
got me a little choked up here.
Well,
The thing I want to say is that, what the testimonial that you gave to me 20 years ago on there is pretty much what I live by through my whole evolved trading career, because I wasn't evolved early on in my career. And people called me a gunslinger, and my trading size and swings were unbelievably huge. And then it took me a while to mature, and especially taking some major hits. And that's when I started to really develop, is when you really came and we met and you hired me as a coach. And I've since really lived that. And I really want to be authentic all of the time. So those people that are out there and challenge me about being wrong, well, I'm going to be as good at being wrong as anybody you ever met. That's a great testimonial, and thank you for all of that. Katie, Arvi, anything left to say?
Just want to wish everyone a great weekend.
No, I think that was really really awesome, Matt. Slim's impact on everybody shouldn't just be what Slim thinks. It should be how Slim goes about market analysis and trading, and how Slim goes about being right and wrong. That's life, right? We're not always going to be right every time, and that's, if you want to be a good trader, you have to be okay with being wrong a lot.
Yeah, it's a
Right?
good example
So,
for all of us.
yep.
totally.
Absolutely. All right.
Cheers.
Thank you all. And we'll be back live in a couple of weeks.